Hi, everyone, and welcome to the Amber Data Derivatives podcast. I'm here with Jake O, who is an OTC trader over at Wintermute. Jake, how are you?
Hi, great to be here.
Absolutely. Super excited to have you on. We've had a couple of your colleagues on, some of the founders of Wintermute. I mean, Wintermute is one of the biggest players in the crypto space across all derivatives products and spot products. So excited to hear, your thoughts and your insights, especially on the OTC side, because a lot of the businesses from our customers who use Wintermute are transacting OTC. So very interesting to see that. Before we jump into that, maybe you could give us a quick background about yourself and how you started in trading and your previous life before crypto.
Sure. Yeah, no, thanks for that. I guess first of all, I'm hoping that following both Evgeny and Johan doesn't tee me up for failure here and a massive disappointment, but I'll give it my best shot. So, yeah, I mean, early career prior to Wintermute, the most formative part of it was working on a global macro desk. So sort of straight out of uni, hired as a derivatives trader at the time. Wouldn't have been able to tell you what that meant. You obviously pick it up very much on the job, but was really sort of running a prop book with very, very wide mandate, had the freedom to trade pretty much any market under the
Wow.
sun with enough liquidity to execute within certain risk bounds. I guess at the very start of your career, you're just following what everyone else on the desk is doing. It wasn't like I was going out getting my own risk limits on some huge edge that I'd found. It was more like following people into different markets. And ultimately what that taught me very, very early on is to chase volatility. Obviously, opportunity is bred from volatility. Like everyone sort of knows that. I guess the classical school of trading will teach you that. So we spent a huge amount of time ambulance chasing, almost like what's going wrong in the world or where there's something wrong with a bit of microstructure. And predominantly we were executing within futures at the start, definitely on the listed side, so listed futures and options. And then towards the end, which I'm sure we'll sort of lean into, got involved in more of the OTC sort of agency business there. Actually, what it sort of meant in practice with a broad mandate is one day I might be trading oil over an OPEC meeting.
Yeah.
Another day we'll be looking at the German yield curve over like a central bank meeting or a speaker, or US equity indices over sort of the earnings season. So, I mean, it was so broad that I remember getting lean hog limits to trade a Chinese swine flu outbreak in my first sort of 6 months. And just sort of jumping in front of weird size in the book and all sort of things that obviously you're just thrown into it at that point. But what that really gave me early on is a huge appreciation of sort of volatility and sort of the intersection of different policy fundamentals and how each market ultimately is correlated. I guess sort of when you really boil it down to those bare bones, as sort of already mentioned, like we was always taught to chase the volatility. Naturally, that led me to sort of crypto.
Yeah, sure.
There's a few sort of things. There's a guy there I remember trading it, and at the time, everyone, all the older guys were sort of giving him stick about it. And I think the real turning point there was obviously the Tesla news when they added the balance sheet, added to the balance sheet sort of early 21 maybe. Like prior to that, I was already looking at it in and out, being sort of the young gun on the desk. Things were moving around. As soon as it hit the news, I was already playing around in it, but it was the one thing that I was unable to get limits in because of, so it wasn't really liquid enough to do the size that was
Right.
going to be needed. There was no real perp market at the very start, or there was, but it wasn't all that. No one really knew how it was priced. It was pretty opaque. But I guess as the sort of market matured, it's given more and more freedom to explore that side. And then sort of clearly going down to the natural progression from there is clearly, okay, we're looking for a volatile market. Let's look at the option space. We've been looking at these vol markets, which are sort of down, sort of 15 vol, 20 vol. When you look at some of the currencies, I mean, you're trading even lower than that. So when you're used to trading those, and then you see this huge emerging industry with vols through the roof, you think, okay, there's got to be opportunities here. So over time, I guess initially, again, sort of classically trained in terms of directional, taking on delta, swinging it around events, that sort of thing. gradually, as the book grew and sort of the experience grows and different niches and edges present themselves, I then transferred into sort of the non-directional element, and clearly Vol is a great location for that. And then off the back of that, started doing a bit of sort of OTC, a few OTC projects with sort of ourselves and some of the other sort of players around the London sort of scene, trying to build into different positions on that side. Eventually then sort of got some market color that we were putting out for our counterparties and clients at the time, got picked up by one of the guys here at Wintermute, who I then sort of started chatting to fairly frequently, and ultimately that led me here. So
fantastic.
now yeah, so times obviously a full circle, but yeah,
really nice.
A lot happened early doors in terms of sort of career progression, trade a lot of different products, and just decided time to niche down, really want to get in and sort of build out this capability.
So kind of just jumping back to the idea of chasing volatility more in sort of the macro space early on when you first working on that fund. What would you guys like look at headlines and like some sort of news event happen, or do you guys have scanners and like, oh, all of a sudden, this asset class moved 3 standard deviations of its normal move, or this particular currency pair? Like, what was the like criteria for this is like a tradable moment?
Yeah, I guess sort of how we were ultimately taught to trade, and the core premise of that style of trading is that you're understanding what is priced in, hopefully, to every market. I mean, there's ultimately only really 2 ways to make money trading. If you boil it down to the bare bones, you're buying under fair value, or you're selling above it, right? So what we were doing is we'd have a whole plethora of different markets that we were keeping track of the macro on, and maybe there was someone in the pod who was better at the commodity side or the bond side or the equity side, and I guess there's open lines of comms. You sort of understand between yourselves like where the fair value should be priced, and at the time it was definitely in terms of, okay, there's a central bank event coming up, like where do we think the market's priced? You're looking at the curve, you're looking at rates, you're looking at expectations, you're looking at what analysts are saying, you chat to other people trading at other shops. Like, you form a very, very good sort of, it's almost binary in terms of, okay, fair value's here now. If X happens, then Y will happen. Or we think Y will happen. It's obviously never as black and white as that, or I'd be on a beach in Costa Rica by now. But you obviously have this idea of where fair value is, and you're looking for things to change where that is. And what that often meant is, trading around headlines. The headline trading is much harder than the sort of central bank live sort of commentary type approach, just because markets got very, very efficient at pricing headlines in. There's obviously different times where there was really good edge to be had on hitting headlines. I guess one that comes off the top of my head, I remember during the sort of, obviously everyone will remember sort of Trump and his first presidency coming in, and obviously everything was absolutely mental, from obviously the pesos, the S&P that night that he got in, and that sort of volatility was maintained for months afterwards. And it was one of the sort of weekends going into the Chinese tariff trade wars that ultimately he'd come out, and there was an article out over the weekend saying, okay, after he's done with China, the sort of European Union and specifically German cars were next. So you then had this full reassessment of fair value for the German DAX, which is obviously one of the big heavily traded indices in Germany. You had that repricing massively lower on the Monday morning, and obviously from there you're saying, okay, fair value shifted hugely lower because it's taken this new information in. That is the current state. What do we need to do now for it to actually change fair value? And what that actually turned out to be in that occasion was just a Bloomberg read headline that said like no decision made on German car tariffs. And I remember the DAX just repriced immediately higher. But those sort of periods where, okay, here's fair value, something's changed, value has shifted higher. But a lot of those times back then, you were obviously crossing the spread, you were paying up for it, no matter what asset you were sort of trading. But a lot of it came from that and an understanding of where fair value was. And then I guess down the line, it became more of, okay, let's start looking at vol. Let's see like what's moving now. Where are we in terms of sort of percentile moves, as you said, like standard deviations, and often I'd bring up some really esoteric markets, as I mentioned, lean hogs. Like we wouldn't have had a clue that that was going to move. We didn't really know the story there. You see something move, you look into it, you find something that's going on there, and then that becomes the market that you're active in for. Maybe it's a day, maybe it's a week, maybe it's a month for the longer term narratives, but it was a constant like jumping around different narratives and themes just to try and find what was moving.
Yeah, that's very interesting. One of the things that like struck me when I was doing prop trading in Chicago is like what a lot of traders would do is that move would happen and then they would fade the move, assuming that the market like overreacted. But that's very different from like analysis based trade ideas where you do this fundamental analysis and you think, okay, the market's mispriced this, and in the future it'll wake up and reprice. Did you find that your trades were kind of the fading or more of the we've done front loaded the analysis and we think that the market is underpriced right here and it'll wake up later to it. Which kind of side was it mostly dominated by, or both?
Yeah, I mean, a bit of both, right? Like there's oftentimes, and actually some of the really obvious trades in hindsight were always the fade trades because no matter what anyone says, the efficient market hypothesis does not hold, and you get unbelievable moves in markets off absolutely nothing. And it's often sort of a fat finger or someone's misinterpreted a headline, and it can cause really severe dislocations away from that value. And then it was just a case of, okay, let's look at where we think it should be. Is that actually moving? Like, is it already priced in? If so, then you're going to try and fade that. The issue with fading was obviously, of course, like, where are you wrong? Like
Right.
the market can stay irrational for a long, long time. And I mean, everyone's done it themselves. Everyone's got the war stories, but I distinctly remember there was a sort of UK, the Bank of England central bank meeting, and at the time, you'll probably know as well, like you have the little Bloomberg box that you pull over, you filter your central bank events, and you sit there and wait for the announcement, just looking for, okay, what are they going to do? What are the headlines? What's the rate decision? And at the time, everyone was like, okay, it's going to be sort of 25 or 50 bip hike or cut. And it came out that and then the first thing you looked at on the Bloomberg box was like 100 bips, and you're thinking,
Whoa,
oh, something's
that's huge.
happened here. Everyone's sort of trading the gilt, you're loading up on the gilt. You look up, you're offside, and you reread it. And the Turkish central bank had made a move, and it had come up in the figure box at the exact same time that the Bank of England had released their decision. But all these things, like it wasn't just us in that room that had hit that. It was almost anyone in the city that was trading that event had probably thought the same. But so there's always these little rips from fair value,
Yeah.
and sometimes they can be quite aggressive. And I remember that was very, very aggressive in terms of how far that moved from where it should have been priced.
That's so fascinating. And we just had something similar like less than 20 days ago. We had the BOJ hiking 25 basis points. And then we had the VIX at like 65 on a Monday morning. And peak COVID crisis was 80 or something. And now we're back at 16. So very interesting, kind
Yeah.
of one of those types of scenarios. So now, after being at the fund, you find yourself on the OTC desk at Wintermute. Now, do you take like directional views as well now today, or whether in vol or whether in price direction, or are you mostly kind of market making and taking customer flow and just trying to be as neutral as possible?
Yeah, definitely the latter.
Mm.
I mean, this sort of my route to on the OTC side is, I guess, as I grew in terms of um, ultimately grew as a trader and sort of understanding different products. Then for me, the delta neutral sort of, okay, don't want to be sat on any directional risk. That just spoke to me a lot more for sure than actually taking on positional risk. I think there was edge in that a long time ago. The edge there has definitely
Mm.
um, I come in a hell of a lot, and ultimately that's what sort of led me into the market making world. So yeah, here at Wintermute, we're completely delta neutral. We're not taking prop risk, and we're sort of hedging out anything that hits the desk, but predominantly working on sort of customer flow. Yeah.
Interesting. And what do you think is kind of the main difference for either the customer or the market maker of doing like an OTC transaction versus an on-screen transaction? Is it practically the same besides, the chat communication style, or are there like other considerations like counterparty risk and things like that that you wouldn't normally need to think of on screen?
Yeah, I mean, I guess the benefit of there's a couple of ways to think about the counterparty risk element. Obviously, if someone's trading on screen and it's being crossed on, for example, on a Deribit or Paradigm or the CME, there's always some element of risk transfer there between us as the market maker and the counterparty on the other side of the trade.
Hmm.
You wouldn't say the risk is zero because that's never the case, but the risk is transferred onto a centralized entity, which has clearly got sort of a bigger balance sheet and an ability to back the trade than who is going to be on the other side of it. And 8 out of 10 times, you can say that's probably very true. Then there's clearly other things that come down when we're trading on a bilateral basis. So then it becomes a little bit more nuanced in terms of, okay, we really have to dig into here. What's the counterparty trying to do? Where's the risk for us? And that involves a huge sort of due diligence process, which is obviously run by a big team of people on our side and arguably on the other side of this sort of exercise as well, just to ensure, okay, no one's going to be surprised. And then it comes down to sort of margin arrangements, actually exchanging margin, all of this stuff that obviously reduces. And it's not just reducing our risk, it's reducing counterparty risk as well. Like everyone's always in this position where that is going to be the ultimate aim when you're putting a trade on, especially on a sort of pure bilateral basis, is how do we reduce the risk here? And I guess it becomes more and more prevalent and in vogue as the sort of counterparties that we're dealing with on the OTC side specifically are becoming more institutionalized and arguably more regulated. So all the sort of bells and whistles that we've picked up and moved over directly from traditional finance and sort of the traditional PB method of margining, for example, has been built up within Wintermute for the benefit of us and our counterparties. So all of these things are coming up, and that's ultimately a lot of the time now, like when you're in the room with the big institutions, it's always, okay, talk to me about risk. Talk to us. How do we know that you're managing your risk internally? How do we know that one counterparty that you've got somewhere isn't going to put us at risk if we're traded bilaterally? So yeah, so it's all sort of works with each other. But yeah, it's been definitely front and center to what we've built out.
Fantastic. And one of the things that is really cool about kind of trading with an OTC desk is trading like more bespoke instruments or underlyings. So do you guys, quote altcoins if someone wants to trade an altcoin option that doesn't exist anywhere else? Is that something you guys will quote? Do you guys also quote exotic types of packages and stuff like that?
Yeah, I guess to speak to the first point initially, I guess we're sort of, if you sort of took someone to the side who trades with multiple desks at the moment on the street and sort of said, what's Wintermute ultimately known for? Coverage and pricing is always the one that comes out on the top. And we've really dragged that over from obviously the old spot business. Like ultimately, we've come from a position of market making on centralized exchanges and with a huge coverage. And we've really brought that over to the OTC space. And it by no means stops at spot or sort of the CFD and the other derivs sort of Delta One offering is coming over into the option space as well, where yes, we're winning a lot of business because we're able to price some really quite esoteric long tail options. Obviously, there's much more intricacies that come with that than sort of just being able to look at a screen and estimate the volatility. But it's definitely something we're doing. It's making up a larger proportion of the book. Definitely on the option side. And I do think it's a huge area of growth. And we're seeing things like, Deribit obviously adding, albeit at the shorter tenors, they're adding different products there. And you can see there's the appetite to keep rolling it out and increasing the coverage. Then you've got other sort of both on-chain and centralized platforms that are doing the same. So there's a huge market there for all options. It's just the real problem that we're looking to solve there is providing enough liquidity to counterparties who want to trade them clearly at a price that makes it actually feasible and attractive. that's sort of the trilemma if we talk about it in a blockchain perspective.
Yeah, definitely. And is there any like situations, because with altcoins, the thing is there's a huge asymmetry in information. So like if someone probably
Yeah.
wants an altcoin quote, they probably know a lot of the details of that altcoin. And for you guys, I mean, you might not be an expert in, XYZ coin, but you still provide a quote. So how do you sort of deal with that risk? Is there like, size limit? Is that the only thing you can do? Or um, that seems like a unique problem, like adverse selection bias.
Yeah. I mean, you're right. I mean, it comes down to ultimately it's the same issue that we're talking about on the spot side. If we have someone come in for a big clip of an esoteric altcoin, which you think, okay, we need to really look into this, there'll be a lot of sort of research that goes into it. But if you think about the team that we've got, even just in London, we've obviously got seats in London and Singapore, and predominantly on the trading desk, we've got CFI guys, we've got a huge DeFi team as well.
Mm,
And more often or not, if there's a coin that comes up, someone's had some exposure to it at this
cool.
point, or at least knows where to look or who to ask. So it's not as simple as just saying, oh, like we know exactly what to do immediately with this. It will be a case of let's go and do the research. That research will be done internally, and often, very, very often, it will come back and we'll still take the risk on as long as we can hedge it and we're comfortable with whatever price we're quoting on it. And yeah, I mean, there's ultimately going to be a price for anything. We want to make sure that we're winning flow wherever we can, and that extends to these sort of heavier tail assets, which ultimately you win the business because sometimes there's not appetite elsewhere to be
Mm,
trading them.
yeah, that's very cool. So it's pretty interesting. You had a lot of experience in like all these different like global macro asset classes, and then you get into crypto. Have you noticed like any ways that crypto might be different in terms of maybe the Saval surface or the funding rates or anything like that? Is there anything that has stuck out to you over the years?
Yeah, I guess obviously the simple and easy one is the base level implied volatilities. They're obviously like they're settling way higher at the moment. Whether they'll always be like that's I guess another question and up for debate. I would argue not, but because of that sort of really high volatility profile, clearly sort of margining, it has to be much more nuanced in terms of sort of very capital intensive compared to arguably traditional finance. There's very few, I guess. There's less ability to net positions, for example, across different assets. So,
Mm,
for example, when our margining system, we're running it on portfolio margining for counterparties, but we're still isolating it into okay, let's look at the Bitcoin exposure, let's look at the ETH exposure in their separate buckets for obvious reasons in terms of these correlations. They're not really strong enough to be sort of cross margining against each other, and
mm,
that's a decision we've made for that purpose. But the result of that is obviously, especially when you're sort of letting someone sell options, it's much the capital intensity is something that needs to be taken into account. Um, I think because of that, definitely the IV is quite often or normally sort of trading over realized. There's always this sort of
mm,
consistent flow on like selling vol, and we've seen that. And again, this comes from different sort of counterparties. On one side, we have the flow from maybe you have miners that are selling, maybe you have venture funds that are selling, maybe you have just some hedge funds or family offices or large holders that are looking to generate some yield. So you have them constantly stepping into the market. And then on the flip side, you have sort of the directional element. And I do think that gives you sort of the vol and how it actually behaves. Very similar to sort of the VIX spike. I mean, perhaps in traditional assets, albeit sort of much more frequently, you get these big rips and coming back down. And I also think that maybe the behavior of that is driven by there's a lot of retail flow that are active, I think, in screen-based options,
mm,
which arguably perhaps vol gets sold at much lower levels than a sort of professional trader may look at it. And I do think that's when you're getting a lot of piling into sort of low levels of volatility, and then you're getting the big spikes as everyone's covering, and that's becoming fairly frequent, especially when it's been super like almost dead in terms of we were having these big periods of, or it feels like forever or eternity at the moment when they do happen, but you're getting a couple of weeks where really nothing will happen apart from vol will just sell, vol will sell. So there's someone still selling it really, despite the fact that actually you look at that and you think the actual sort of risk reward there has shifted drastically, but you're still getting that coming in.
Interesting.
But yeah, I think that's the sort of the main sort of differences, I'd say. Obviously, the 24-hour market has a huge difference and has all sorts of implications for hedging throughout the sessions because the liquidity profile is changing so drastically. You have the Asian session, you have London, New York, and then when you hit the weekend, it changes completely. So you've got multiple different moving parts that clearly you sort of, if you're hedging an S&P, a SPY option, and the weekend hits, that you're off the book, and that's it. You can go and enjoy your weekend. In crypto, it's not like that. So yeah, there's just a huge amount of moving parts, and I think this is changing on a daily basis as space less fragmented, I'd say, and sort of more size is coming in. It's becoming more liquid. The pricing is becoming much more efficient, and which naturally is the result of a lot of this institutional flow coming in.
Yeah, that makes a lot of sense. Speaking of the flows and like institutional flow, we had the spot Bitcoin ETF. I definitely want to talk about, where does that take us? But around a decision time, there was kind of a nice vol premium being priced in the market. We're also seeing a nice vol premium being priced in sort of the Bitcoin forward vol curve for the November election. Do you guys on the OTC desk, did you guys see like flows of people wanting to trade that a lot, like these big decision events? Or is it mostly still flows based off, more like directional kind of allocation as opposed to like a vol bet for something like this?
Yeah, I mean, you definitely have two distinct buckets of people who are actually using options for either sort of I'd split them into sort of speculation / directional trading, and just seeing it as a new way to take on a bit more leverage. You have that, and obviously there's different benefits of using that option structures instead of a perp, for example, and that does have its own space. On the flip side, then you obviously have I would argue, slightly more nuanced trading that we're seeing from maybe some of the more traditional funds that are active in crypto. You have a lot of the crypto relative value and vol traders who are coming in, and they're really they're really just isolating the volatility component, and they'll be hedging out any sort of directional risk. And yeah, for sure, they'll be very active around these. But I guess really where we're seeing them being active is still the same in terms of, okay, there's a fundamental catalyst coming up, or something big's just happened, something needs to reprice, but then you have, I guess, the vol guys just going long vol, you have directional guys taking a bet directionally, but it's all sort of happening in the same pockets. And I think when you look at sort of the structure and where the volumes are coming in, even on a sort of derivate, when you can look back at the sort of history there, you can see how it's all sort of isolated into these little pockets of activity where obviously vol takes a move one way, usually higher, and then it just sort of drips back down as someone somewhere goes, oh, I like this is a nice yield, we're going to try and hit this, or sort of cover fairly quickly. But yeah, I think that's sort of generally where we're seeing activity. Obviously in the event into November election, clearly sort of Derivs put that 8th of November expiry out for that reason. What will happen into that? I guess we're seeing so many buy the rumor, sell the news. Is the last one, well, even that, what was end of last month before with Trump's Nashville appearance. He was going to change the world with his sort of Bitcoin reserve fund, and clearly that also sort of vol just collapsed straight after that. So yeah, we see this, and I think that on its own shows that the vol players are just definitely in the market alongside the sort of directional guys, which and then sort of price actions folding post events.
Yeah, that's a great point. That we've been kind of conditioned to buy the rumor, sell the news in sort of all event world for crypto. Very interesting.
Yeah.
How do you think?
Yeah,
Okay.
there'll be one soon where there'll be a big sell the news. There'll be everyone shorting vol, and actually the news won't be priced in, and it's going to hurt a lot of people. But I think it's one of those things where it works until it doesn't, and as long as people are controlling the downside when it doesn't,
Right.
I think that's generally the trade that's working and has been working.
Yeah, that's a good point. Like that's the secret to like short vol trading is being able to minimize the losses when that thing does actually go crazy and explodes higher. What do you think the spot Bitcoin ETF? Like, what kind of effects do you think that's going to have in sort of trading crypto in general and maybe the vault markets once we get options?
Yeah, I think obviously the first real entry into this institutional sort of participation has arguably been the spot ETFs. It's definitely had a mixture of impacts. I think the first of all, there's a really interesting study that was doing the rounds a week or so ago about looking at sort of liquidity profiles through the sessions and how much it's changed since the spot ETFs have hit. Obviously, before there was a lot of sort of the Asian market, the sort of APAC session was huge last cycle, especially just because the bulk now of this flow is being done institutionally within um, definitely within the US session now. That's sort of where the liquidity is moving to, obviously, especially depending on the different benchmarks they're using. It takes on how obviously market makers are allocating and running the creations redemptions. So there's all these things, there's all this flow that is coming into the market. There's people watching. Again, this is another thing that sort of works until it doesn't. But obviously, when they went live, some people sort of clocked on, or maybe this became the self-fulfilling prophecy that actually, okay, let's watch the Coinbase premium and let's just trade the rest of the day directionally off that. And when they went live, that was a trade that people, I think, probably did quite well on. Whether that was actually the driver or, again, this sort of self-fulfilling prophecy where people see it working in sort of quotations and jump in. Obviously, that will be one for for us to look back retrospectively on. But there's all these little things that are changing, and in terms of the sort of, I guess the other side of the coin is when people were looking into, okay, what hedge funds are holding this. The trade at the time, everyone was looking for, okay, we're going to wait for the hedge funds to start putting out the filings that say they're loading up, and that's going to be the next big catalyst for the move higher. And actually, it turns out that all they've managed to do so far is compress the funding rates to the point where no one really wants that trade anymore because they're doing the basis trade. So there's all these little things that, as new players enter the market, it's really changing the sort of structure, the microstructure, and ultimately how people are trading around these very short-term narratives, but ultimately longer term, I think obviously the options is, I guess they've already pulled back slightly on some of them, but I think at some point when they do eventually happen, there is definitely going to be more sort of volatility compression in there. It's just another, if you sort of look at, again, like these big hedge funds and the big traditional players who are looking at sort of the basis trade in the current spot ETFs, like they're still doing the basis trade when it's sort of maybe 2 bips. And that just shows like when you're looking at 2 bips a day, we've been so conditioned in crypto to think it's nothing, it's not even worth playing that. When actually, if you're coming from a different perspective, thinking this is great, I'm getting 2 bips a day for doing nothing, that sort of reconditioning of, okay, traditional funds are going to get in, they're going to look at the option space, they're probably going to be selling it there as well. And I think ultimately longer term, these yields are going to be compressed, and definitely on the long term vol is probably going to trend lower. Hopefully not to sort of SPY levels where that sits around now, but I'd assume in the sort of the fair value longer term is probably somewhere around there. How long it takes us to get there, who knows? But yeah, I think there's definitely, that would be, in my opinion, sort of the main driver of that flow coming in.
Yeah, that's a great point. It kind of touches on what you had said earlier about sort of the variance risk premium and the vol market, and now the basis closing in as well. Like traditional players have just a lower cost of capital that mimics more risk-free rates, when the basis in crypto is 30% annualized, well, that kind of reflects the cost of capital in crypto. So now you kind of have these market players coming in with capital that's cheaper, and they're happy to take a
Yeah,
10% yield annualized in the basis, or shut down the variance risk premium to something that's a little bit more, a little bit less lucrative, so to speak. It's very
for sure.
interesting. Do you so where do you think sort of the crypto market goes from here? Obviously, there's a lot of headwinds with depending on how the election goes, and regulation, and hopefully more and more instruments. We'll see if Solana ETF and all these other ETFs that might come down the line. Where do you see the future of crypto? Do you see it going centralized, or do you see like parallel universes where there's players in DeFi and CeFi and TradFi?
Yeah, I think my general sort of view into the end of this year is definitely very sort of supported. Main sort of factors for me, and I guess the rest of the market really, and the reason why this sort of period where ultimately there's been a lot of frustration when we're just stuck within this big range
Mm-hmm.
and we're just getting ripped out by sort of these short-term supply overhangs. Ultimately, is everyone's looking at the macro environment, and it arguably has never sort of looked better. We obviously know that yields, 10-year yields back under 4%, S&P equities sort of ripping again back to all-time highs almost, and everything is just looking like the dollar's selling off. Like all of these traditional liquidity sort of release valve kind of trades are ongoing. The only thing that's lagging at the moment is crypto, and I do think that having spoken to a lot of sort of the institutional desks and the brokers like over the last few weeks really, there's definitely an element of okay, we've got to take this election a bit more seriously now. Like everyone was trading it before as a little bit of a meme almost, but now we're sort of seeing, when you see the market start moving on something, I think that then has to become precedent.
Mm-hmm.
And now it's clearly there's such a divergence in the approach to crypto policy that I think it just needs a few more eyes on it in terms of, okay, this is actually what's now driving us. And I think there's obviously the debate coming up on September the 10th. And I think that's something that at the
Yeah,
moment, people have been fairly short-sighted about, just looking what's happening
good
tomorrow
point.
or next week with jobs. But actually, that could actually be the thing that causes this move, because we have the September the 10th, and we've obviously got the clean run until November, really, that they're
Yeah.
probably not going to be debating much more. So I do think the result of that will have a larger impact than most people are currently anticipating, and that could be the factor.
What a good trade idea. Because, yeah, obviously the election is going to be a big mover one way or the other. September 10th might actually, the election, I mean, we
Yeah,
had the Joe Biden Trump election that was definitely decidedly one way versus the other. So this September 10th election might be the same. And if that's the case, then we could see it repricing one way or the other. Very interesting point.
yeah.
So, kind of wrapping up here, I like to close out with some more kind of personal questions. So, what do you like to do for fun outside of work?
Yeah, I guess spending a lot of time at the moment doing selfishly, doing a lot of training in the gym.
Nice.
I used to be pretty into sort of CrossFit, that side of things, and got a bit more functional in terms of sort of the training and just keeping things interesting. So signed up for, I guess, a couple of marathons, and sort of looking to do an Ironman towards the end of the year, which would be interesting, as my swimming ability is next to none. But hoping to nail the running, and then everything else will, touch wood, fall into place.
Love it. That sounds great. And then over the years, was there any favorite trading books that like really stuck out to you?
Yeah, I mean, I think definitely anyone involved in the vol space should almost be a sort of student of any of Taleb's work. I
Mm,
think The Black Swan is an absolute crucial read. It's a brilliant book. The other one, he's Skin in the Game, Fooled by Randomness. I think literally anything he's ever touched is liquid gold. So those definitely, that trio. I think if someone's looking for more of sort of storied, maybe tongue-in-cheek books, there's a really good one about the development of Lehman Brothers sort of ETF market making desk,
Wow.
and I can't remember who it's by. Jared Dillon.
Oh yes, Street Freak.
Street Freaks, yeah, that's a brilliant read. I think over the years I've probably read it 3 or 4 times, and every time you sort of find yourself laughing at different spots. But it's a really, really good book about, and it ultimately boils down sort of, you can see how far the market's come since then, to where we are now.
Yeah, yeah. I just recently read that book. I think someone on the podcast had recommended it, and I was like, "Oh, I got to read that."
Oh
It's
no,
really good. Yeah,
that you've got 2 recommendations now.
that is awesome. And then lastly, if someone wanted to, some young man or young woman wants to do a career like yours, any advice you would give him looking back?
I think looking back, I think definitely work on a network. I think that's incredibly invaluable. You've got these amazing tools like Twitter, people who you learn how to use Twitter well, just get in people's DMs, add value, show an interest, niche down into something, and really just understand, I think, when you're getting into it, what kind of trading you want to end up with within, and understand sort of the different parts of the cycle. I think everyone goes into things thinking there's just one way to trade, and there's not, by any means. So niching down early, I think, definitely would be the hindsight. But for sure, I think a wide range of experience can also be quite useful, like looking back on sort of different experiences, because you can bring a lot to the table there. But yeah, network, I think.
Love it. Well, Jaco, thank you so much for coming on. It was a great podcast, great meeting you, and looking forward to everything that's coming forward.
Likewise, take care.